Hello, hello. Yes, good afternoon, everybody. So today is 22nd of May 2019, and we're going to look at how to trade false breakout. So the first thing what we're going to do is we are going to try and look at what breakout is actually. The first thing before we move on, we want to look at what breakout is, and then we'll now develop it into what false breakout is. So what I want to say from the onset is that best time to trade normally is after the false break. It's not after the break, but actually after the false break. So there are several types of breakout. There's the bullish breakout. You also have bearish breakout, and then there's the false bearish breakout. We also have false bullish breakout. So we'll start off first of all by explaining what breakout is. Then we'll move straight to what false breakout is. So we'll first of all get rid of lines. Yeah. Then remove period separators. So breakout is actually when price breaks above a level and then it sustains that breakout. When price goes beyond a particular level or below a particular level and then it sustains that break, that's called a breakout. But anytime price breaks above a level but then it fails to sustain that breakout, that's called a false breakout. It means we are likely to the opposite direction, opposite the direction where price actually broke to. So we have a level here. It's a very good level. I just support. That's the level. Then we also have a level there. This may be a very good resistance, and this could be level 100. Then this could be level 10. Not exactly 10, but just some random numbers. So anytime you have a level, two levels like this one, normally we know that you're supposed to buy when price is below and then sell when price is above, something like that. The price should come back up to this level so that you can pick a sell, this resistance, like that. So then you pick a sell, price heads down for support, then pick a buy, that, a resistance, it's a resistance, then sell place, support, buy place, resistance, and a sell place. So basically we know that we are supposed to be selling every time the price gets to this resistance. These are the places to sell from. You're supposed to sell when price, anytime the price hits any of these levels, you're supposed to look for a sell. Then anytime the price hits the lower ones, you're supposed to look for a buy. Support and a buy place, a support and a buy place, support, a very good place to buy from. So we expect that while these places are buy places, here a buy, we expect the same place here to be a buy. But something normally happens that instead of price actually turning into a buy from this point, we break clearly to the lower side. So the act of price opening above a level and then closing below a buy place, that is what's called a breakout. So specifically, this is called a bearish breakout because it points to the lower side. It means the price is likely heading to the lower side. Anytime you have a level like this one, you have a support, then price opens some few pips above it and then it closes below. That's a bearish breakout. What you expect to happen is for price to again come back to the same level like that before we can see a steady move to the lower side, something like this. So this another sample of breakout. This is called a normal way a breakout should happen, that it uses a level as a support, then price goes below that level and then it comes back to the same place, and that becomes a very good place to sell from. So the first thing you need to know when trading this one is this, that don't sell anywhere unless we were buying at the same place previously. Don't sell anywhere unless we were buying from the same place previously. If this is a support, as I'm saying, this is a support, support, a support. These were potential buy places, a potential buy place, and a potential buy place. The same exact place is called a sell place, becomes a sell place. So this will be a good support here. A support. There's a support, and then you also have this as a good support. Here, a support. And then also this was a support which was broken, so we don't consider that a resistance. Yeah, so as you can see, these are the place to trade from, because the same place I was buying is the same place you ought to be looking for a sell from. If there was no trace of buying previously, don't sell from that point. Don't look for a sell unless somebody else was buying actively the same point. And then a breakout is only genuine depending on how price breaks it. So if you have a price like, notice something like this, when price is heading downwards, assuming this was happening, that when price is going down, it emerges from the upper side, it begins to do something like this, it goes down, this should be right. You see price heading down, and instead of heading with big candles, it heads to the lower side in peanuts, something like this, that it goes down slowly, then it continues down, that still in peanuts, then it continues to the lower side, peanuts, then it continues to the lower side. This is still a breakout, just that it's not happening with candles that we expect to be happening. A good breakout must happen with a big candle. This is still a breakout. Just look at the price goes down as I'm drawing it. You find that this is a good, there's a big move to the lower side, declines, it declines, it declines even further, and then it breaks to the lower side and then opens below. Then we see this. So this is still a breakout. The fact that the price opened above and closed below is still a breakout, just that it's happening in peanuts. A good breakout should happen with big red candles if it's bearish, and if it is bullish, big green candles. So the same thing, if you notice this happening, the price heads down, it continues down, it continues down, and then as it approaches this line, it actually gets exhausted, and then it breaks below with peanuts. That is still a breakout, just that it's not as strong as we want it to. It's still a breakout. That is still a good breakout, just that it's not as strong as we want it to. So we move forward. This is the first case. Another case could happen like that. The price comes from a resistance, something like this. Find it going down, something like this. There's an active sell, continues to the lower side of this, continues even further to the lower side, this, then this one becomes maybe a candle with a tail on top of it. You see a break below. So the second breakout, which is this one, this is always the best one. It's more genuine than the first one. Anytime you find place where the price has actually broke above or below a level with a big candle, that's a very good sign that the breakout is genuine. So what we do now is wait for price to get back to the same place, then we pick a sell at the risk least possible, expecting that sell to push price even lower. So these are two types of breakout. There's the first one, which is not as good as the second one. The best you do is anytime price breaks that level, wait for price to get back to the same place, pick a sell from that point, expect the sell to push price even lower. So as it is, we are going to assume this is the breakout, this is the genuine one, the second one, some the resistance, this, it's deleted. So if you're monitoring a chart like this, then notice that this has happened. The price continues down. Sorry. A resistance. Then it gets down, it comes back to that level. This is a very good sell place. Then when you are waiting, if you're waiting to buy from this point here, if you're waiting to buy from this point, just ensure that price has closed above this level. But if it has closed below, don't find yourself buying it. Instead, wait for price to come back, as I've said, then pick a sell from that point. So in this case, assuming price retraces back up to this point and then it heads clearly to the lower side, then that is a genuine breakout. That's now a good breakout. That's what's defined as a good breakout. Let's check our chart. Of this chart here. So we are trying to find exactly where there's a clear breakout so that we are able to understand it. So we have this print, well, we have a support at this point. Yeah, the entire place is a support. So as you can see, we have a support at this point, then one big candle opened above and then it closed below. This is what's called a breakout. It's a bearish breakout. And as long as the price now remains below that level, we expect it to proceed even further to the lower side. So anytime you find that there's a support like this, then price heads below it with a big candle. That's a sign that we are continuing towards that direction. And the second one, which is this, is also a very good breakout. Have this a support at this point, then price went below, it came back to the same place, that bearish pin back candles signaling that we're supposed to sell. The same place, a sell place, the same place, a sell place, the same place, a sell place, and then we had a buy place which didn't actually mature. So this is a very good example of a breakout being like price sustaining a breakout. Also have this here, have this one. Anytime you have a support or a resistance level, the one I'm drawing, anytime you have something like this, just look at how price was breaking above or below it. If you find that there was a level on this side as a resistance, then price was actually breaking above it with a big candle, then that's a sign that you're continuing that direction. You're supposed to look for a trade in the direction of that breakout. Like in this case, we have price going up, traces slightly, this is a buy. Then when the price gets back to the same place, we are still buying. We continue to buy as long as the price remains above that level. So we check another example here. Have this one. This as a good support here. Also have this as a good support. So the main reason I'm having two lines on my chart is because I realize that support and resistance are not exactly like, they're not exactly one line. There are zones where anytime price reaches, it may attempt to break above it, or it may not even attempt to, it may reach just slightly around it before it reverses to the other. So that's what I'm drawing as on to cover for those cases where price fails to hit a level, or the cases where it goes slightly above it but then it gets sustained. We have this support at this point. We have a support at this point, and then we also have a resistance at this point. So what this means is, if you have a support, then price breaks below it, it comes back, comes a sell place. If it goes down, it comes back as still a sell place. Goes down, comes back, this is still a sell place. So you continue to sell until the day that price actually violates that level upper side. So I would technically have sold here. I would have also sold at this point. I would also have sold at this point. Then I also have sold here. And then the subsequent ones, I'll also have sold until the day that you sell and then the price closes above, then leave it. But as long as the price keep being sustained below it, you are still selling. Keep selling, keep selling, keep selling until the day that the price actually closes above that level. That's when you're supposed to buy. So this, from what we've seen, this is called a good breakout. Let us now look at a case where, sorry, we want to look at a bullish breakout. This has been a bearish breakout. Let us look at now a bullish breakout. We have this one, resistance. Also have this one. So I'm disregarding the whole place from this point to the future. I'm actually not taking this into account. I'm only looking at this point up to the moment when price broke above and then it hit this high strike. That's the only time I'm focusing on. So from that point, we have this one, resistance, which was holding at some time. Then price rose above it. And notice, this happened with a big candle. This is what's called a breakout. The candle which triggered the rise beyond a zone is what is called a breakout candle. So after price has gone above that level, you expect it to proceed even higher, to remain above that level. Something like this, that the price goes up, a support, a buy place. Have this, a support, a buy place. We have this, a support, a buy place. Then we have this, a support and a very good buy place. So when price goes below the same place, that should be a very good place to sell from. And notice, it goes with a big candle, then it gets back again with a big candle. It goes up with a big candle, then it takes a gap for price to go below it. So a gap is like one big candle that opened above and closed below. If you were to look at this chart on the monthly chart, you'll not see this gap. You'll see just one big candle. So that's the thing. A gap is also like one big candle opening above and closing below. Of this level here, this can be a very good example. Support, a resistance, then there's a tremendous rise above it, came back to the same support, a support, the same place has been a buy place. So anytime you notice that this is happening, the price is using a level as a resistance, then it breaks above it with a big candle and then remains above that level. That's the normal case of a breakout. That's the normal case of, that's how a breakout happens normally. Ordinarily, that's how a breakout should happen. Price rises above a level and then it uses the same level which it is using as a support, as a sell place. It now uses at as a very good buy place. So let's now look at a false breakout. What false breakout means. So we have our chart. We have this the same diagram I do when we are starting. We have a level here being used as a resistance. We have a level here being used as a very, very good resistance. Second time is a resistance. Second time is a resistance. So assuming something like this happens, that instead of price bouncing off of this level, it actually breaks above and then comes back to the lower side like this. The entire place, which is this one, this is what is called known as a false break. It's called a false break. The entire place from this point is called a false break. So anytime price rises above a key level, but then it fails to remain above that level, instead it heads straight below that level, then what you do, wait for price to retrace back to the same point, pick a sell lower side. So this is a very good place to sell from. This is normally very, very good place to look for a sell from. Anytime price breaks above a level but then it fails to sustain that breakout, then that is the correct place to look for a sell from. After that false break, the next retracement back to the key level, the best place to sell from. So you'll basically wait for price to continue up, then get back to the lower side. Then when it comes back to this level, pick that sell. Pick that sell and then have your stop loss above that false breakout itself. Have your take profit at this level, the lower one. I hope this makes sense. This should make some little sense that the best correct place to sell from normally is after the false break. Anytime you have a key level that the price is using that level as a resistance, any day, every time it keeps using that level as a resistance, that you now find that this is a very good sell place. Instead the price breaks above it but does not hold above it, that is always the correct place to look for a sell from. I hope that should make sense. It should make some very good sense now that a false breakout is opposite genuine breakout, in that anytime price breaks above a level, instead of remaining above that level, if it comes back below the same level, then that's the correct time to sell, or a buy if price actually broke below, something like this. So we have price moving from that point, it heads down back to a support, continues up, then it breaks below this level like it's continuing to the lower side, then it comes back again back to the upper side. If it can retrace back to this level, then that's the correct place to look for a buy from. So what this simply means is that the break which you saw, this one, is actually a false break to the lower side, that you're supposed to buy the next retracement back to this level. I hope this makes sense. It should make some very good sense that false break can happen either way. It can happen on the bullish, bearish side, or on the bullish side. Anytime it happens, the correct place to trade is after that false break itself. Like this, we have a false break, buy the next one. We have a false break up, you sell the next one. So this is a very good one. This is a very good setup that if you can identify it on a chart, then you're supposed to trade it. And normally the break here happens to the big candle, then the break below also happens to the big candle. Let's look at our charts. You see, so we have this level here. It doesn't look that good, but it will at least try to explain what you are saying. We have a support at this point, a support, then price descends below it, and then it gets back to the upper side. So this one was the correct place to buy from. That's the correct place you're supposed to, after that false break, you're supposed to look for a trade. Then the next one also is also a trade. So normally people will tend to, you will find yourself buying this, then after this breakout you find yourself selling somewhere here. If you sell it based on the knowledge that this is a sell, we are downwards, but then it closes above, be prepared that the price may use this place as a potential buy place. So you auto bought, and even in the future, if it have got back to the same place, you have been able to pick a very good buy. Check again. Let's see if there are any good. This one here doesn't look this one. So this basically, we have a minor support here. Then price has gone below the big candle, has come back again with the big candle. So this was the correct place to look for a buy from. The correct place normally, the correct place to trade is after the false break. Don't enter immediately when that you begin to gaze that this is a false break, you find yourself buying here. Wait for price to proceed up. There are high chances it will come back to the same place to give a very good place to buy from. This doesn't look very good, but at least it will try to explain what we are saying. We have this as a resistance, then price somehow breaks above it, tries to remain above, and it breaks below. So the fact that price actually got below this level, that is what we mean when we say that it fails to sustain the break above. Wait for this one to exhaust, let it continue down, then retrace back to the same point, pick a sell. Your stop loss in this case should be above this point, should be above this level. So if you pick a sell here, assuming you successfully managed to pick a sell where I'm having my level at, pick a sell here at this point, your stop loss needs to be above the entire false break itself. So you can see from the past, the same place was used as somehow resistance. Resistance, and your stop loss above it. So anytime you put your stop loss above somewhere here, just ensure that the amount you are risking is not more than you the trader. So this place is long. From this point here to the upper side, it's around 250. So that's a lot of money. That's a lot of money. Only have your stop loss above this point if your account can accommodate that loss. If you cannot, it's better you leave it. It's better you reduce your lot size to a manageable size. If you're doing one, reduce it to that which you can manage, and then pick that sell precisely, have your stop loss, and then have your take profit at the nearest support, which is this one. Check the next one. So false breakout does not always only happen horizontally. They can also happen vertically. I mean diagonal. Sorry. This, assuming you have a trend line that the price is using as a support or as a resistance. Move the line chart so that it does not show on our screen. Assuming you have this as a resistance, then you monitor how price is getting this resistance, and then price maybe attempts to break above it before it gets back, something like that. The price goes up like that clearly, then it traces back to our side like this, then it continues up the same level. So notice those places, those are potential places to sell from. They are potential sell places. Then price comes back down. It's red. Continues to the upper side. So basically, if you are just trading resistance, you're supposed to look for a sell at that point. You're supposed to look for a sell at that point. You're supposed to look also for a sell at that point. And somehow the price goes your way, then it comes back to the upper side. So if you successfully sell it here, then something like this happens, that instead of price selling off from that point, it actually rises above it like this. Don't find yourself buying in price heads upwards. Instead, wait for price to get back to the lower side. Then if it can come back to the same trend line and you see a sell signal here, that's the correct place to sell from. That is always the correct place to look for a sell from. So you'll find yourself having this as a sell, took that sell, then probably you took the sell which went wrong, took that sell, but somehow also took this sell which has gone correctly. So this is another way false breakout could happen. It does not necessarily have to be horizontal trend line, horizontal level. It could be a trend line. And in this case, this is the example. You use a trend line as a resistance, goes beyond it, goes again below it, sell this one. This is like a V. Price tries to rise above, there's a break to the side, it goes up, breaks again the second time. It's like a confirmation that we are selling. So the same thing applies for the horizontal one, V formation, Z formation. Price goes to a level, like this, then it uses that level as a support, then it does something like this, that it breaks down clean, breaks again above level. I'm going to mark this big so that you're able to see whatever I'm saying. That, and it breaks again up with big candle. If it can break below, that's a confirmation that we are selling. So this one is actually a false break. This is a false break, and what it means is that the price needs to try retracing up to the same level before we can pick a sell. So anytime you find this, anytime you find something like this, that you can identify that V formation, like the Z formation in any chart, especially around a key level, then it's always a confirmation that that direction is valid. It somehow confirms that we are still downwards. You find a level like this, check this Z properly. Price breaks below a level, it breaks again above it, then it breaks below. This is always the best time to look for a sell. If you notice this in any chart, wait for price to come back to that level, then pick a sell at the least risk possible. Expect that sell to push price even lower. So the entire place, which is this one, the entire place, in this case, this one, is actually a false break. This one, it deceives us that price is still heading upwards with this handle that the price is heading upwards, but then the next one confirms that we are downwards. So you're supposed to maintain a bearish perspective, but wait for price to pull back up to this level, 48.54. Pick a sell from that point, have your stop loss here. So what you could do, assuming you cannot wait for this, that after price breaks above a level, you find yourself that you cannot wait for it. You cannot wait for it to come up to this level. Have your pending sell limit, have your stop loss, have your take profit at least 2 times the amount you expect to reach that trade. So that should bring us to the end of this webinar. So far, looked at just everything what we've been looking at. We have looked at the idea of false breakout, how to trade it correctly. We've seen that the best always is to enter after that false break itself, and we've seen that there are 2 types. We have horizontal, so the diagonal one. Either way, the best is to enter after that false break. So we want to look at this one before we leave a real chart. This place here, this place is a very good level. Price was using as a resistance and a sell place. A resistance and a sell place. Also have this a resistance and a sell place. There's also this one is a resistance and a very good sell place. There's the next one, which is a resistance and sell place. Also have the same place here. Now price has gone above it. So we expected that when price broke above this level, it was supposed to remain upwards, but then somehow broke again to the lower side. So the entire place from the moment when price went above that level and when it has actually gone back to the lower side, the whole place is called a false break. You're supposed to look for a sell on the first retracement towards that level. So you're supposed to sell it. Basically, you could have sold there. Those have sold the second one. All of them, you have your take profit at this level. So as we speak, you're supposed to be in money. Take profit was hit already. And when price gets back to this level, assuming the current day's candle, the current week's candle pushes the price up to this level, it's still a very good place to sell from. So thank you very much. That should bring us to the end. If you have any questions, you can post them under the comment section. post them just below your screen. You'll find a place for comment, or you can leave them here on the live chat. So thank you very much. See you again tomorrow, same time.